Good morning, this is the latest market news. I am Uliana. Asian stocks were mostly down Wednesday as investors factored in the prospect of the Federal Reserve reducing its lavish monetary stimulus this month. Japan's Nikkei 225 fell 1.1% and Hong Kong Hang Seng dropped 1.2%. Markets were also down in Singapore and Australia and slightly up in the Philippines, Malaysia and Thailand. After the US reported stronger than expected employment figures last week, markets became convinced the Fed would start to taper off its stimulus. The central bank's $85 billion of monthly bond purchases have kept US interest rates low to encourage economic recovery but also sent a flood of money into stock markets worldwide in search of higher returns. In a lackluster session which failed to produce too many surprises, volumes were generally low as investors continued to stock US yields ahead of next week's FOMC meeting, which is already being highlighted as a focal point for markets leading into year's end. Weaker this morning against the yen, the US dollar currency swaps hands at a rate of 102.73. Meanwhile, across in Europe, the 17-nation currency topped out at a high of 1.3793. Not too far from the next critical technical resistance level of 1.3840. Stronger against the greenback this morning at 1.3761, the Euro-US dollar will take the majority of the direction from US data flows over the coming days. Wednesday is a light day for major economic updates, although today's releases on non-farm payrolls in France and consumer price inflation in Germany deserve careful attention for deciding if the Eurozone's outlook is changing. France payrolls 6:30 GMT. The notion that the Eurozone economic recovery is still alive ran into some turbulence yesterday with the news that industrial production in France suffered an unexpected setback in October. Considering that the previously released unemployment numbers for France in the 3 months remain stuck at an elevated 11.0 to 11.1% range, it's best to manage expectation down for today's report. It was the latest market news provided by IGA FX. Goodbye.